One of my favorite parts of performing stock due diligence is the operational analysis. This is effectively where you get to find out how a company ticks. And today I'm going to share with you some of the key methods you need to understand in order to perform it sufficiently. How's it going, guys? Ryan here and welcome back to the third episode of my stock due diligence series, and today we are covering the operational analysis. As I mentioned, one of my personal favorites, as we really get to see the actual company's operations, the projects, its future, all those sorts of fun things that make you excited to invest in an organization. But before we get into that, please remember to give this video a thumbs up if you do enjoy it. Helps me out so much with the YouTube algorithm, and subscribe for more investing, stock market, wealth management, and cryptocurrency content. We cover all that cool stuff and much more as well. And I'd also love to know your thoughts in the comments section below on some of the best operational analysis techniques or factors that you consider when doing your stock due diligence. So without further ado, guys, let's get straight into today's video. So the operational analysis, what exactly is that? Well, as I mentioned, it is quote unquote what makes a stock tick, or effectively how the company runs, what it does in production or software provision or as a service provider, whatever that company is that you're looking to invest in. How does the organization operate? And this is a great area to cover because it's an area most people would be most familiar with. And as I've mentioned in my previous episodes, I highly encourage you to look into industries and companies that you have some sort of background knowledge on. So for instance, if you are in the mining game, looking into mining companies makes sense because you understand what makes mining companies tick. But I'd just like to mention as well, in today's video, we are covering the basics, the minimum requirements that you need to look at when performing an operational analysis for your stock due diligence. There are plenty of other methods and plenty of other factors that you can take into consideration and then you can put into your strategy when investing in an organization. But let's take a look at some of the key factors we need to take into account. So when looking at the key factors, there are 6 that I really want you to consider when you're performing your operational analysis. The first of which is the company's core competency, and effectively a core competency is what the company does and what the company does really well. So for instance, if a company is focused on gold mining, that is their core competency. They are a gold miner. Everything else on the side is a peripheral. For instance, you wouldn't call a gold mining company an IT company if they had a large influx of IT services in their organization. There is a very big misconception, particularly in the modern day and age, that you're considered a technology company even when your core competency focuses on something else. The second factor I want you to consider is ongoing projects. And this may be simple as, once again, going back to the mining example, what are the gold mines in this gold company that are operating? Effectively, we're looking at what the company currently does, whether it be something that they're currently working on now, or our second point, or third point, future projects. What are they looking to get into as well? So these 2 points are really important because effectively with the ongoing projects, we're looking at what is going on now, and in the future projects, we're looking at what is going on in the future and what could be obviously generating additional cash flow. Operational detail. And this really comes down to the nitty-gritty information. Things like expense versus revenue. Obviously, that sounds a bit more financial, and we covered that sort of thing in our last episode. But we want to get down to the detail here. So, for instance, what is the strip ratio of that gold company we're talking about again? What is the amount of waste per ton that they are digging up, or per ounce of gold? How much dirt do they have to dig up in order to get 1 ounce? That is the sort of operational level detail we really want to get into. Then moving on to the next factor, industry review. What we want to look at is the overall industry that this company actually exists in, because this is really going to impact the operations of that company. For instance, if gold is in demand, obviously gold production for that company is going to hopefully ramp up and expand. Alternatively, if it's not, we're going to be looking at potential reduction in production of their gold mining plants. Then moving on to the final point, and probably the most important point when we're performing our operational analysis, and that is, what is the organization that you're investing in's company competitive advantage? And the competitive advantage is important because effectively that's what makes the stock you're investing in stand out from the crowd. That's what makes this stock better than any other stock that you're looking at. So let's take a deeper dive into the detail of each of these key sections. Core competency is the first one we're going to really look at, and this comes down to what a company is focused on, and it's really important to be able to nut this down immediately when we're performing our operational analysis. While a company may be involved in various different things, they will have their one thing that is their main priority and the thing that they focus on the most. For instance, if a company has multiple projects going on at the same time, they are still going to have a key focus, whether that be once again from a literal product perspective. So if we're talking gold companies, their core competency is mining gold. Simple as that. Nothing to do with the production of gold, nothing to do with potentially tailings of other sort of resources. They are focused on gold. That is their core competency. So as soon as you start seeing companies try to do absolutely everything, that is where you're going to effectively have issues. And the reason being is you need to nut one thing down, do it really well, and succeed at it before you move on or add on the next thing, especially when you're looking at smaller growing organizations. Especially in the microcap space, what you'll often find is these organizations come out and have the new flavor of the month. And you'll see these are effectively shell companies, and they'll be going around doing all sorts of different things, and whenever the next hottest thing pops up, all of a sudden they'll be doing it as well. So if you can't work out what the core competency of an organization is, fundamentally you don't know what that company does. They don't have a key focus, and effectively they're not going to succeed at all things at once. You want them to focus, have their core competency, and succeed exactly in that. After looking at the core competencies of the company you're looking to invest in, that then moves you on to working out what the ongoing projects are of that company. So let's go back to the gold company as an example. I'm trying to keep this as similar as possible across the board so you can really see what I'm trying to focus on. So a gold company, they may have one very large mine which generates the majority of their revenue, but they may also have smaller projects on the go as well, and they may not necessarily be focused on gold. Even though the core competency of the organization is gold and that is their focus, they may have a copper mine, a silver mine, other sort of things going on simultaneously. Alternatively, do they diversify into other things? So for instance, are they in a joint venture with a production organization, for instance, or a processing organization where they dig up the gold, then ship it off, and then assist and are involved with the actual processing of that material for it to then be sold in a processed form instead of just in its rawest format? These are effectively some things you want to consider. Look at all their ongoing projects, and for instance, if you're looking at smaller companies which are emerging, so For instance, you might have your shell companies, as I said previously. And a shell company, typically what they'll be doing is looking for whatever it is they may be interested in. So if we stick to the mining, for instance, they'll be exploring, they'll be looking at different tenements, they'll be looking at various locations to drill. That in essence is their ongoing project. They're looking to develop. The development of the company in that sense is their ongoing project. Hopefully what they do is find a tenement with good historical results and have a good idea that there's something decent in the ground and they start drilling. That for them is their ongoing project. Obviously all sorts goes on then with different forms and different studies being performed in order to realize the material in the ground and if it's a viable or commercially available resource that you can effectively mine up and ship for a profit, which is obviously the end goal of any business. If we take other industries, for example, we might be looking at the fintech industry, and they might be developing a software suite that helps them, for instance, do the BNPL type stuff, so buy now, pay later. Your likes of Afterpay, what is their core competency? Well, it is their buy now, pay later capabilities. They also might have other projects as well ongoing, which are also technology related. But once again, the core competency of that organization is still going to be their BNPL aspect, as that is what brings in the most revenue, and that is effectively what they're good at. But make sure what you do is understand all the different ongoing projects that are currently underway with regards to the organization, so that you can effectively develop a full picture of not only what they're currently doing, but their near-term potential as well. After we're focused on the current objectives and the near-term objectives, we want to look at the future projects of an organization. So operationally, what do they have in the pipeline? So once again, let's go back to that gold example. They've got their gold mines, they have a few other little projects going on, but future-wise, they may have a few tenements which are currently not being drilled, but they have plans to expand and drill in the future. Look at what those are, look at the potential, look at, if available, the historical results, and look at the overall capabilities of the organization in order to achieve those goals. More often than not, future capabilities and future projects, when it comes to mining, for instance, will be focused on extending their key resources. So focusing on drilling out additional areas within their main resource in order to expand it in size and therefore prolong their mining operations right there. But make sure you focus on the future. Don't be so narrow-minded and focus on the now, because if a company is going to grow, you need to understand the future projects to see what's going to add value to an organization or what is going to continue to bring in the income. If, for instance, that gold mine runs out one day, what is the next thing that organization is going to be able to move on to? And this is particularly important once again when we're talking about smaller organizations. When we're looking at smaller organizations, shell companies, all that sort of stuff, effectively, they do not currently have anything going on right now that is bringing on the revenue. So future projects are incredibly important. And what's more important is when the company decides what they're actually going to focus on from a future project point of view. So keep your mind open. Make sure you're forward looking when you're looking at projects, not just current state. Make sure you understand exactly how they're bringing in revenue now with the ongoing projects, but also how they're going to grow, expand, and bring in revenue in the future. After you understand the company's ongoing projects and their future projects, you want to get into the operational detail of exactly what they're doing and how they're making money. So if we once again take the gold example, we have a gold mine set up. They're obviously digging gold up out of the ground. How much money does it cost them to dig it up out of the ground? What is the strip ratio of that operation? What is the method for digging it up? Is it a heap leaching operation, or are they digging down for veins, a more traditional method for finding gold? How much money are they making per ounce based on the current prices? Are we likely to see an increase in production over time or a decrease in production over time? How long left does the resource have in its mine life? These are things we really want to consider. But that was more a point to illustrate the nitty-gritty detail you really want to get into. And obviously one of the best things you can do is run plenty of analysis, plenty of equations in order to work out the value of that organization in, X amount of time, or if X different things occur, or if they found X amount of resources, blah, blah, blah. But we're not going to go into that detail once again. But the point I'm trying to make here is understand the operational detail to the nth degree when it comes to making, that final investment decision. But until that point, make sure you understand the fundamentals of it. So, for instance, if we're looking at other factors that would influence a company, we might be looking at administration costs. We might be looking at the cost paid out to the government for performing operations there. You may be looking at the time in order to expand the size of a plant from stage 1 to stage 2. These are all key factors that you really want to consider, and it will really help you to understand not only how the company works, but as you start going through different organizations which are similar, how that company stacks up against its competitors. And what you might actually find is the company you're looking at is not that good compared to other companies out there, and you might find better stocks to invest in. But you're not going to know that unless you've put in that research in understanding the operational detail of their ongoing projects or their potential future projects. So please remember, do the research into the operational aspects to the nth degree. It does not matter what industry you're looking at, does not matter what company you're looking at, does not matter about any of that sort of stuff. It applies across the board. Once again, if we're talking about Afterpay, how much money does it cost for them to sell their software? Subscription wise, how much they bring in per user of their software versus the costs to, maintain servers, to deploy their software, their pieces of kit that they hook up to existing machines. That sort of thing is what you want to consider. And what is the balance of all those different factors? What are the things that are inhibiting them as an organization operationally? And what are the things that they're doing successfully as an organization in order to be successful? So operational detail is key. The fifth factor that you want to look at is a high level industry review. And effectively, when I say industry review, I want you to understand the market that company operates in. And every market or every industry is going to be obviously quite different, but a number of key factors will affect organizations. The first of which is the demand for their goods or services that they're currently selling now. This applies across the board. It doesn't matter what organization you look at, demand comes into play. Conversely, supply also comes into play. How many organizations are there out there providing that same good or service? Is there an oversupply of that good on the market, which results in a reduction in price? Or is there an undersupply due to high levels of demand, resulting in suppliers being unable to provide enough product? As a result, resulting in an increase in price. Going back to the gold example, if we look at a gold mining company, we're focused on the price of gold, the demand of gold, the supply of gold. What factors are going to be influencing this company from an industry point of view? Well, if we look at a stability point of view from a government or a war or a political perspective, when we're unstable, the price of gold increases. When we're stable, the price of gold will typically go sideways or it will go down. These are interesting factors that you need to consider when doing an industry review, and obviously when we take very different examples and understand the influencing factors, they're going to be very different dependent on each industry. Great example of something that's currently going on right now in 2021 is COVID-19. That has severely impacted many organizations. For instance, if you look at the airline industry, there is a severe lack of flights going around, particularly in the Asia Pacific region, due to COVID-19, and that's because governments are effectively not letting planes fly. As a result of that, demand is high because some people still want to travel, especially in Australia, interstate, but due to supply being low, the cost of those flights is quite high. So this is an influencing factor in the industry that will affect each specific stock or each specific airline in that industry. So make sure you do an industry review, understand the factors that will influence the company that you're looking to invest in. The last and most crucial factor that you want to consider is what is the company's competitive advantage. And a competitive advantage is effectively what makes that company better and more successful than any other company in their industry. Do they have the lowest strip ratio when it comes to mining gold, for instance? So they're wasting less product for what they're getting out of the ground. You may have a company with a 3-to-1 strip ratio versus a company with a 2-to-1 strip ratio. The company with the 2-to-1 strip ratio is able to mine gold significantly more efficiently, cost effectively, and as a result, sell their product for higher margins. That is what makes that company competitively advantaged, and typically looking at something like that, on that basis alone, you'd be more inclined to invest in the company which is making more money due to having lower costs. But there are various different factors across various different industries that you'll need to take into consideration. And in some situations, it can actually be quite subjective as it comes down to what the market actually perceives the value of a company to be versus what it perceives it not to be. For instance, if you see an organization shoot up in value off hot air and rumors, they're going to come crashing back down. Do they have a competitive advantage over other organizations? Maybe they don't. But at the end of the day, that perception is still there. So the key is, if you focus on those companies with the competitive advantage, they will inevitably go back up and they'll be a lot more successful than their competitors, making them the preferred investment. And that's the key there. A company which performs better is obviously going to increase further in value and as a result be a better investment for you compared to their competitors. So take a look at the competitive advantage, understand what makes your company better or potentially not better than other organizations so you can make an informed investment decision prior to pulling the trigger. And that is 6 key factors that you need to consider when performing stock due diligence from an operational analysis perspective. I hope you did enjoy the video, and if you did, please remember to leave a like. I'd appreciate it if you did, and subscribe for more of this sort of content. We cover all things stock market, investing, cryptocurrency, and wealth management. So if you enjoy those sort of things, please remember to hit that subscribe button. I'd also love to know your feedback and some of your thoughts on operational analysis and some of the techniques you use down in the comments section below. So without further ado, I'll let you go, guys. I hope you have an awesome day. I'll see you next time. Cheers.